Welcome back. We've moved into the phase of the stock market where you look for cyclical stocks and generally consumer discretionary shares fit the bill. So which retailers are good enough to risk your hard-earned money on? To answer that question, we have Citi Research Senior Analyst Craig Woolford. He joins us from our CBD studio. Craig, thanks for joining us.
Thank you.
Now, Craig, you're going to be talking at the Deluxe Forum 14, Lux 14 Forum at the Art Gallery on April 1. That's one of the reasons why I saw you there and I wanted to talk to you. What's your general feeling of what retail and then luxury retail, how do you think it's going to do over the next year or two?
Yeah, it's an interesting sub-segment of retail, one of the many that we're seeing outperform and contradict some of the challenges that we see for, say, the big retailers like department stores and Harvey Norman. Luxury goods spending, we think, is over a $5 billion market and is growing double digits. A lot of the global luxury brands still see Australia as an opportunity.
So why do you think there is this passion for luxury fashion?
Luxury obviously has that cachet and appeal. There's been many brands that just haven't had an on-the-ground presence in Australia. We've seen some of the brands introduce their offering into some of the major shopping centres in addition to CBD locations. So in many respects it's been availability of product that's really driven that growth, and there feels like there's still a long way to go.
Well, once upon a time, Craig, probably before you were even born, people used to go to a store like David Jones for high-end luxury, but I guess over the last 20 years in particular there's been a lot of rivals from overseas coming in who I guess are luring away those customers that once upon a time spent their money either at David Jones or Myer.
Yeah, it's been unfortunately a long and consistent decline in market share for the department stores, and luxury is one of the examples where they have lost out to some of the luxury goods brands establishing their own store footprint. They often spend a lot more money on that store and provide a better service offering to the shopper.
Do you think the department stores will learn from that experience and make moves to bring luxury under their roof as well?
One of the methods the department stores, particularly David Jones, has used recently is to focus on concessions, where the luxury goods brand owner essentially rents floor space inside the department store. And that model has worked pretty well for David Jones. Unfortunately for David Jones, they're giving away some of the profit to that luxury goods brand, and it really cedes control, but it is one way to solve one of their many dilemmas.
And also the online issue. It's been a threat to the department stores. Are the luxury brands doing online well?
It's an interesting question. We haven't seen strong growth or active, I guess, embrace by the luxury goods brands globally to online. One of the challenges that luxury goods brands have globally that's very relevant here in Australia is that pricing discrimination between markets. There's often quite different prices, and online really exposes those price differences. So it is a real challenge moving towards an online offering in luxury goods.
So are we actually seeing luxury goods much better priced online than in stores?
The answer is it depends. Some of the department stores in the US will sell certain luxury goods brands, and if you can secure that product as an Australian resident, yes, you can save some money. We've seen an increasing tightening by the brand owners to control distribution globally, which has made it more difficult for Aussie shoppers to make those savings, and sometimes we just have to travel overseas to get the bargains.
Yeah. Do you think one of the big, and I personally believe this is one of the big failings of a lot of the retailers in this country, is that there isn't a price discrimination between what you pay in the shop and what you get online. So if for example, I wanted to buy a Boss suit from David Jones, if I looked at it online, I'd want to get it cheaper than if I go in the store and get someone measuring me up and all that sort of stuff. But a lot of the department stores are charging the same price. Do you think price discrimination is the future for department stores?
Unfortunately, they're probably not offering enough on the other attributes of shopping, being service and range, to really trump the price equation. So really, if you want to buy a Boss suit, you may try it on in the David Jones store, but unfortunately too many shoppers are then still transacting online if it is sufficiently cheaper. Really, it needs to be about 10 to 20% cheaper, so it's a really big challenge and headache for the department stores.
So on that criteria, are you reluctant to be a big investor in conventional retail department stores?
Yeah, that'd be a fairly accurate way of summing it up at the moment.
Right.
Yeah, good retailers are embracing the challenges that they're facing. In the listed retail space, Super Retail Group is one company that's done that and operates in a different segment of the market. But it is a real challenge. It's a transition that the entire retail industry is going through locally and globally.
Do you think the Myer-David Jones merger is a good idea for both companies?
I think the Myer and David Jones merger is a very tricky situation for both companies. The biggest dilemma at the moment is that the required merger ratio that Myer would have to offer is far in excess of that previous approach back in October 2013. So they really need to step up if they're going to offer a price that even gets the David Jones shareholders to the table. At the end of the day, most of the merger hinges on cost savings, which is all the departments have done to drive earnings growth over the last decade. And really, to be successful, in my view, they really need to grow sales and find a better solution there.
Do you see that if they do merge, one might have to claim the upper end of retail and the other services the middle to lower end?
Yeah, I mean, it hasn't been described this way, but obviously this merger raises the question of whether there's too many department stores in number and too much floor space. And one way of solving that is by merging and differentiating the two brands more significantly. I worry about the floor space that may be created or freed up and the ability to bring in more new entrants to that floor space if there was a merger of Myer and David Jones.
Well, Craig, historically speaking, if you look at the cycles of stock markets, this should be the time when consumer discretionary stocks do really well. But of course, this one has the curveball of the internet challenge. Do you think consumer discretionary can do well on the, if the next leg of the stock market cycle does go up, as I expect? Do you think consumer discretionary will do well? And if you do, what kinds of stocks do you think might do well in this up phase?
Yeah, it's an interesting question because unlike previous cycles, there's been a huge level of anticipation of a recovery in economic cycle and therefore retail spending. So through 2013, some of the retail stocks doubled, and they did so without the earnings growth. So JB Hi-Fi and Harvey Norman are two stocks that had significant share price appreciation. And so it's now actually up to the retailers to deliver that earnings growth and that cyclicality that you're referring to. We find it hard on valuation to get excited about most of the retail stocks. We have very few buys in the sector. The leverage you get to the cycle is not quite as good as some of the other industry segments, say like building materials or transport. And as I said, these retail stocks have run really hard over the past 12 months already. No,
I don't want to put you any pressure, Craig, but is there one that if your dad went to you and said, come on, Craig, give us one decent retail stock, would you have one?
Look, we have a buy on a very small retailer called Specialty Fashion. Yeah. They're a clothing retailer, and like I mentioned with Super Retail Group, they're actually dealing with and grappling with and actually making changes for all these structural pressures that are facing retail. So we do expect margin improvement for that company and therefore an opportunity.
Okay, mate, thanks for joining us. I look forward to hearing you speak on April 1 at the Deluxe 14 Forum. Thanks, mate.
Thanks, Peter.
Okay, so that's the take on retail, and I think Craig really did give us a pretty good understanding of what's going to happen going forward. After the break, one of the most efficient ways of reading which way the economy is heading is to pick the brains of the best and brightest in business. Next, we'll hear from a man who's got a direct line to the big end of town, particularly those people who count the numbers. Keith Skinner from Deloitte.